Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report for Tuesday, November 14th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Let's take a look at the big picture as usual, work our way into the day itself. I'll start with this weekly chart. Just to remind you that a month and a half ago or so, we settled below this 10-month channel bottom that is well above the market at 259.91, anticipating as a 1 to 2 month downside objective this descending channel bottom at 179.36, which had been past tense narrowed to within 3 to 5 weeks, 2 to 3 weeks or so, while we were holding below this descending 1/3 speed line that contained last week's buying pressures pretty well today at 219.50. Now, of course, we closed above that level on Monday, and this has set off a buy signal into December trade. I am now, rather than anticipating the upper 170s over the next 2 to 3 to 5 weeks, I'm expecting the mid 260s over the next 3 to 5 weeks. So we are now bullish into December trade, anticipating this narrowing zone of resistance that begins at 259.91 weekly chart and ends at, on the daily chart, 269.52. So this 10-point range narrowing daily into the mid 260s over the next couple of weeks, able to absorb buying, on a monthly, possibly quarterly basis. Now, I'm also showing you our next 3 to 5 day target. And with recent volatility, especially Mondays, we could see 236.54 over the next day or two. But I think, it could easily take into Friday within 3 to 5 days. 236.54 likely to contain daily buying pressures. Now, we sort of grappled with whether to call this a 3-star weekly resistance level at 236.54, and I really didn't want to confuse its strength with 219.50. 219.50 is the buy signal, is our base of support through the rest of the year, essentially, and above which the 259.91 to 269.52 region narrowing daily expected as a 3 to 5 week objective. On the way up, 236.54 now considered a 3 to 5 day target, able to contain session strength, and for you 3 to 5 day swing traders, I will say possibly into next week. That is a clear possibility. We could test 236.54 over the coming 2 to 3 to 5 days, and then fall off over the following full week of trade. So there's that. Now, if we were to close above 236.54, that further accelerates bullish momentum, and I would expect this 3 to 5 week objective in the 259.91 to 269.52 region to be narrowed to within, 1 to 3 weeks. So 236.54 is an important level. It is considered an intraday likelihood if we push or open today above 230.61. 230.61 is this gap high. It's actually the low part of this gap that occurred a few weeks ago, about a month ago in the middle of October. So holding above 219.50, a level, by the way, that can be bought for the day, can be bought by 3 to 5 day swing traders up to 236.54, and can be bought by 3 to 5 week swing traders up to 269.52 and dropping daily. Options traders, you may reach for 265 out of the money calls that don't expire. I would go 2 to 3 months out on that expiration. I consider this a 3 to 5 week move, but the most frustrating thing in trading options is if you buy the proper strike price only to watch it, erode to essentially nothing as you're correct on the directional move because of the time decay element. So you don't want to go too close just because you want to buy a cheaper option. You want to go a little further out to preserve delta, as I say, which is to reduce your theta, your time decay element. So 236.54 is actually in reach today if we push through that 230.61 level. 236.54 able to contain session strength, and from there we can quite easily fall back to 219.50 within 3 to 5 days or less of testing 236.54. But keep in mind, we have a 3 to 5 week buy signal above 219.50, anticipating this 269.52 formation, and so closing above 236.54 is considered an eventuality. And if over the next few days, no good reason to be short Tesla if you're a 3 to 5 day swing trader. In fact, just the opposite. You want to hold out, you want to hold on, then you want to be long with a settlement above 236.54 over the 3 to 5 day time frame. We could easily reach that 259.91 former long-term channel bottom on the weekly chart that you can see right here. And so this is considered an objective now over the next 3 to 5 weeks, 259.91 in combination with 269.52 following Monday settlement above 219.50. Let's talk downside today, that in the event we break or open below 219.50, 213.22 in reach. That is a downside 5/8 Fibonacci over the last 2-day extremes. And if we do close today below 219.50, this formation here at 205.32 is likely within 1 to 2 days where we can place a daily low. So if you're a 3 to 5 day swing trader and we close below 219.50, you may hold a short position overnight, anticipating 205.32 within realistically a day or two, where we could bottom out for a day, possibly the balance of the week. But this is just a session containment level. It's also a downward pivot point in that is a secondary sell signal if settled below. But I wouldn't hesitate to go short the market as we move into a December trade with a settlement today below 219.50. A failure to follow through on a pretty clear buy signal, which did occur on Monday above 219.58. A failure to follow through on that and then to close back below it is in essence a valid sell signal. And I would see if we were to close back below 219.50, realistically over the next couple of weeks 190.48, and over the next 2 to 3 weeks 182.14. So closing back below 219.50 does have downward pivot point qualities. Closing below 219.50 today does signal 182.14, that descending channel bottom, which on the weekly chart is 179.36. You can see both of them here. And on the way down, we would have in quick order the 205.32 formation, the 190.48 trend line, so forth and so on in stair-step fashion. The steps look like this to me. If we close below 219.50 within a day or two, 205.32, within a week or two, 190.48, and within 3 to 5 weeks or so or less, that's the wrong image, sorry, 182.14. Closing below 219.50 within 3 to 5 weeks, we should fall into this low 180s to upper 170s, where we could actually bottom out through the rest of the year, possibly well into Q1, and from here round back up within several months to this channel top that is presently in the low 270s. Now, that's on the weekly chart actually. Upper 260s, 269.52. So I think I fleshed out everything there is to be talked about. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com. You won't regret it. We offer that 5-day free trial. You'll see a lot of good stuff. I'll talk to you tomorrow with Wednesday's Tesla. You have a great day.